In today's video, we're going to take a dive into the January 2024 housing market update for Cedar City, Utah and the greater St. George area in southern Utah. We'll also take a look at what's next for mortgage interest rates, where home prices are headed, and if we can expect a housing crash in 2024. And then we'll follow that up with some tips for if you are a seller in this market or if you are a buyer in this market. All right, let's get to it. All right, now I know I said the January 2024 housing market update. It is because we are in January, but this is going to take into consideration data up through December 31st of 2023. So the most recent housing market data that we have for Cedar City, Utah and the greater St. George area. Now, my name is Elizabeth Prisbrey. I'm with Stratum Real Estate Group. If you are looking to buy, sell, or invest here in southern Utah, I would love to help you out with that. Please feel free to call, text, or email me. I promise you I will respond. All right, I have jumped into our slides because if you've been here for a while, you know that I am a visual person and I do like to show images to help you track what is going on here. We'll first start with Cedar City, then we'll jump into St. George, and then we'll tackle some of those questions that we talked about. The first thing I want to take a look at is Cedar City's median sales price for the month of December year over year for the last 5 years. Now we're focusing primarily on 2023 so that you can see what happened over the last month, but we are comparing that year over year. To finish out December 2023, Cedar City's median sales price is sitting just above the mid 300,000s, right around $360,000. It is up from last year in 2022. However, it is slightly down from 2021 when we were in the height of our housing market here. Now, it is considerably higher than those pre-pandemic years. You can see we did have quite a bit of growth before we went down last year in 2022, but we are starting to trend upwards again. And we will discuss the reason why here as we go through some of these slides. But I wanted to start with the median sales price first, just to give you a general picture of what has been happening the last few years in Cedar City. Now, the next thing I want to take a look at for Cedar City is the absorption rate. The absorption rate is the month's supply or the inventory currently on the market, meaning that if no new homes were listed on the market and everything sold out, it would take about this long to sell these current homes, assuming no conditions changed. Now, you can see on the left-hand side here, it is going by month. So we have half a month's inventory, 1 month's inventory. You can see right in those pandemic years, we were sitting just around 1 month's supply, a little bit over for the month of December. Currently in 2023, we are just under a 3-month supply, just over 2.5 months supply. It is considerably more than what we saw during those pandemic years, but it is still less than what we saw pre-pandemic years, and it is slightly less than what we saw last year. The absorption rate is important because it tells us what type of market we have and how healthy it is. Typically, a 6-month supply is a balanced market. If you have less than a 6-month supply, it is considered a seller's market. Our market is really unique right now, though, and we'll go over why that is here over the next few slides. Another thing that we pay attention to when we are checking how our housing market is doing here are the days on market. Now, this is done in median days on market, which means half of these homes are going to be on the market for less than this, and half of these homes are going to be on the market more than this. I did not pull averages because averages have outliers. Maybe you have a home that sold in 2 days, or maybe you have a home that sold in 150 days or 300 days. There are homes that do that. So we are taking the median right in the middle here so we can really get a good idea of how many days these homes are currently sitting on the market. Again, you can see during those pandemic years, homes were not sitting on the market for very long. This means that at least half of the homes were on the market for about 15 days in 2021 and about 5 to 6 days in 2020. Really short amount of time. Now, 2023, 2022, we are actually getting up over those pre-pandemic years, and we are up about 45 days on market currently now in 2023. So just about a month and a half where those homes are sitting on the market. Now, again, we'll talk a little later as to why this might be important if you are buying or selling a home. Now, real quickly, before we jump into our St. George slides, I just wanted to give you a quick picture of what's going on with our new active pending and sold listings. The new listings are those homes that came onto the market within the month of December. Now, you can see those dip down quite a bit back in 2022. Remember, things were really getting tight there. Inflation was out of control. Interest rates were really high. Now we're seeing some changes that we will discuss, but we are seeing more listings coming back to the market in December 2023. It's really pretty comparable to 2020, 2021. It is still less than that pre-pandemic pre-pandemic year of 2019, but pretty comparable to 2018. New listings to the market are showing us that there are still sellers out there that are wanting to list and sell their homes. Now, active listings are all those homes currently on the market right now. This takes into account all the new listings that hit in December, as well as homes that were already on the market that had not sold yet. So you can kind of compare the active listings to the new listings to see how many of these homes have been sitting on the market longer than the month of December. Now, our active listings in 2023 are less than pre-pandemic. They are less than last year in 2022, but they're about double what we saw in 2020, 2021. This is a good thing because it does show that our market is more stable than it was in 2020 and 2021. It doesn't quite have the active listings that we had prior. However, we are starting to see more of those sit on the market a little bit longer, as we saw in our days on market. So things are starting to stabilize here a little bit. Now, as far as pending sales for December 2023, that is when a buyer and a seller are in contract, they are in escrow, and that home is no longer active on the market. However, it is not considered a sold or closed listing. Now, this is higher than last year in 2022. It's slightly higher than 2019 and 2018, but it's still just a little bit less than 2021 and quite a bit less than 2020 as far as the Cedar City market goes. It tells me that our market is still strong, but it is more stable than we saw in those pandemic years. Now, for our sold listings, those are comparable to 2018. However, it is still less than 2019, 2020, and 2021. But what we really want to compare it to is last year in December 2022 to give us an idea of where our housing market is heading. Is it going to go up or is it going to go down? So that's something we want to take a look at as well. And that's why I give you a 5-year comparison so that you can see what has happened over the last several years and what we can expect. Of course, these pandemic years are outlier years, which is why I went back a little bit further so that we can compare to the years prior to that and get a good idea of the Cedar City market. All right, so let's jump into the greater St. George area so we can get a clear picture of what this is doing. Now we'll go back to that median sales price. This is where I like to start just to kind of give you an idea of the housing costs here in the greater St. George area. Again, it is the median sales price, meaning half of the homes are sold for less than this, half of the homes are sold for more than this. We don't want to pull the average because that pulls outlier years and doesn't give a true indication of the type of market you can expect in this area. Now you can see the median sales price in St. George was up over $500,000 in 2021. That's over $200,000 more than it was in 2018 and 2019. So we saw a huge significant increase during those pandemic years in the greater St. George area. However, last year in 2022, we did see a slight decrease in the median sales price in St. George, as well as this year in 2023. We'll talk about why this is and how we can read the data and what we can expect moving forward. But I wanted to show you that we are seeing a little bit of decline here in the St. George area, again, so that we can determine what we can expect moving forward. Now, for days on market, St. George really had a pretty low days on market, just like Cedar City did during those pandemic years, under 10 days in 2020, about 20 days in 2021. In 2023, we're looking really pretty comparable to what it was pre-pandemic. It is a good 10 days less than it was last year in 2022. So homes are sitting on the market for a shorter amount of time than they were last year. However, with it being comparable to the pre-pandemic years where we saw the median sales price really kind of sit stagnant for 2018, 2019, that's a good clue as to where the St. George housing market is going. All right, we're back to the absorption rate. Remember, that is our month supply. Under 6 months is considered a seller's market. We are still under 6 months here in the St. George area. Of course, in 2020, 2021, our pandemic years, unprecedented years, around a 1 month supply. That's why we saw those housing prices increase significantly. However, in 2023 and 2022, we are up over the pre-pandemic years for our month's inventory. So that is a good sign, also an indicator of what we can expect moving forward when we take a look again at the median sales price in 2018 and 2019, how that absorption rate and those days on market affected those and how they might be affecting 22 and 2023. Now, as far as new listings in St. George, it is pretty comparable to 2022, 21, and 2018, meaning things are pretty stable here. We still have sellers wanting to list and sell their homes. As far as active listings, those are slightly slightly below pre-pandemic years, a little bit lower than 2022, but really pretty comparable. So that again tells me we are sitting steady here and we have a pretty healthy housing market here in St. George. Now, as for pending listings, remember those are the ones that are in contract, in escrow, not active and not sold. Our pending listings are very comparable to last year as well as 2018. However, it is less than 2021, 2020, and 2019. Again, this is a good indicator on where we are heading, and we will talk about that. All right, now our sold listings. This is what I found interesting. Our 2023 sold homes in the month of December is less than half of what they were in 2021, slightly down from 2022, but still considerably down from what they were in pre-pandemic years. So this was pretty interesting to me. I kind of wondered why this is, as our new listings pretty comparable, our active listings pretty comparable to pre-pandemic, same with our pending listings, pretty comparable. So this is pretty interesting to see these sold listings down this much in December of 2023. However, I am interested to see where this will go next month, so we'll have to keep watching this. Maybe some of these are closing the first week in January and they just didn't want to close up at the end of December because they weren't having to move as quickly as they were during those pandemic years. We don't really know. We're going to watch this and see why. All right, so the next thing I want to talk about is what is next for mortgage interest rates. Now, I showed this slide on my last monthly market update, but I thought it was worth showing again because it really gives you the correlation between inflation and the 30-year fixed rate mortgage. Now, this blue line here, in case you didn't see that one, this is our inflation rate or our CPI. This green light here is our 30-year fixed mortgage rate. You can see by this graph that the 30-year fixed mortgage rate tends to follow that inflation rate or that CPI. Now, remember we talked in last month's market update how we saw that inflation rate go up really pretty high in 2022, which is what caused the Fed to jump in and start taking action on our interest rates. So that is when we started seeing those interest rates start trailing up behind that. So that's the first thing that I wanted to note there. So if we take a look at the current US inflation rate or CPI, now this goes through the end of November. So next month I'll be able to take it through the end of December, but I will put this link down below so you can actually check this out on your own anytime you would like to. But our current US inflation rate is at 3.14%. You can see how it's been trending downward in 2022 as they've taken steps to raise those mortgage interest rates. We did see it get down to 2.97% in June of 2023. And actually, I'm going to show you something interesting on that. It went up a little bit in August and September, and now it is down to 3.14%. They like to see that at around 2% inflation rate. So we are still working to get there. Now, if we take a look at the U.S. average weekly mortgage rates, we can look over the last 5 years, which is what we've been looking at for Cedar City and St. George. We can see where these interest rates have gone. But what I want you to see here is back on October 26th, we hit the highest average mortgage interest rate at 7.79% that we have seen in the last 23 years. So that really was pretty high. But now, as you watch it, it is starting to come down, and it actually has been trending down for the last 9 weeks, putting us at about 6.61%. So now if you can see on my screen here, back in July of 2022, that was actually down to 6.78%, but then the interest rate started to go up around August and September, which is on par with what our inflation rate did here. So the Feds are really tracking that inflation rate, and so we can kind of see what's going to happen with interest rates based on what is happening with our inflation. So seeing as how our inflation is going down, it is quite considerably less than it was in June of 2022 at 9% inflation. I do believe we will continue to see interest rates trending down if we stay on this path. Now, I don't want you to just take my thoughts for it. We'll take a look at some other sources here. This is an article by Business Insider. It shows that Fannie Mae forecasts a more gradual drop in rates and believes the 30-year fixed mortgage rate will remain in the upper 6%. So right now we're at 6.61% during the buying season, but they are projecting that it will reach as low as 6.5% by the end of 2024. MBA is a little bit lower. They're saying it's going to be between 6.3 and 6.6% during the peak buying season and closer to 6.1% by the end of 2024. The National Association of Realtors is also agreeing that it will be in the upper 6% range during that peak buyer season, but then top out the year around 6.3%. And then the last source that we have here is Realtor.com saying that the average will be about 6.8% overall, but again, they are saying that it will come down to about 6.5% by the end of 2024. So that kind of gives us an idea of what we can expect next for those mortgage interest rates. Of course, we never know what's going to happen, so we have to just keep watching it and hoping for the best. Now that leads me to our next question. Where do we think home prices are going? Well, if we take a look at some of those main sources that we just looked at for interest rates, these are the people that are in it all the time. This is more on a national base, but we'll talk about that with Cedar City and St. George as well. But Fannie Mae is forecasting home prices to raise by 2.8%. Mortgage Bankers Association is forecasting that they will raise by 4.1%. However, NAR, or the National Association of Realtors, is only showing a 0.7% increase in housing prices. And then Realtor.com is actually saying that home prices will fall by 1.7%. So there's a wide range here of what they are forecasting. However, we want to focus in on Cedar City and St. George and what we think is going to happen here. Now, as far as Cedar City, as we take a look at the median sales price and what it has been doing, the trend that we see it is going towards, as well as the absorption rate, comparing it to those pre-pandemic years, as well as the days on market and those active and new listings, I do think that we are going to see an increase in our median sales price. I don't think it is going to go down in Cedar City, but I don't think it's going to be a large increase, maybe between 3 and 5% in price value. As for St. George, we have seen it start to slowly trend down the last 2 years, but our days on market again are very comparable to pre-pandemic years, and our absorption rate is going up, which means that we have more homes on the market than we did those pre-pandemic years when the housing prices were sitting pretty still or pretty steady there. And then again, basing it off of our sold listings here, as well as things being pretty comparable across the board to our pre-pandemic years as far as active, new, and pending listings go, I think the St. George housing market is really going to remain a little steady. I don't think it's going to have a huge increase. I don't think it's going to have a huge decrease. I think it's going to stay pretty stagnant, at least for the next 6 months, as we work out what is happening with interest rates. But we'll update this each month, so keep coming back. Now, the next question most people want to know is, will there be a housing market crash or a recession? Honestly, in these two locations, you've seen the data. Inventory is still lower comparable to what it was pre-pandemic years. There continues to be demand for housing. We're seeing similar numbers as far as new listings, active listings, and pending listings. So the demand continues to be there, and the pricing seems to be remaining steady. We're not seeing huge declines or huge increases. So for these two areas, at least, I don't see a housing market crash happening because there is still high demand and not enough inventory. However, with these higher interest rates, we are seeing it stabilize so that those aren't going through the roof. Now, if you are looking to sell your home in Southern Utah, taking all this data in, the first thing I would recommend, obviously, is to call, text, or email me so we can set up a plan for you and get you in the right direction. But what you really want to focus on here, you know people are listing, you know homes are selling, but you'll want to make sure that it is priced right. If you price it too high, hoping that you're going to get that based on a previous market from a couple of years ago, it's going to sit there. Your days on market are going to be longer, and the price will likely drop below what you expect to get or what it could have sold for if you price it right in the beginning. So those are two big things that you want to make sure that you are taking a look at. And then be ready to negotiate. Although inventory is low, it is not the 2020 or 2021 housing market, so sellers can't just have everything that they want. There is still a lot of negotiating happening right now, so be prepared for that and know what you are willing to give on and what you definitely won't give on, and have that conversation with me as we go into it. And then, of course, if you are buying a home in Southern Utah, there's a few things that I want you to take note of. The lower interest rates that are coming is going to increase demand, which means there is going to be more competition out there in the market. So if you've been sitting on the fence, make sure that you are prepared. Get your finances ready. Meet with a lender. If you don't have one, I have a few that I can recommend to you and set you up with to get you on the right plan. And then, of course, call, text, or email me. I can help you in the right direction with this and make sure that we set you up so that you will succeed when the time is right. Whether it's now, 3 months from now, 6 months from now, a year from now, whatever it is, it's better to have the knowledge, have a plan, and make sure you are moving in the right direction so that you can get the best possible opportunity for you and your family. All right, those always end up being longer than I expect them to be. There's a lot of information in there. If there's anything I missed or if you have any questions, please don't hesitate to reach out to me. I'll say it again, call, text, or email me. My information's up here in the corner or down below in the description. I promise you I will respond. All right, until next time, have a wonderful day.